SK Hynix stock price popped on IPO day. Take a look at this chart, guys. Up 13% on IPO. Let's talk about that in today's video. There is a lot of data showing that the price of SK is set to skyrocket in the coming weeks, months, and years. So let's talk about that. As always, guys, please like and subscribe. Always like to point out your boy has a $2 million net worth, $886,000 in stocks with over $300,000 in cash. So I do know a thing or two about investing. If you guys are interested in learning the method I'm using to buy stocks and grow my $1 million portfolio, consider joining the Patreon, link in the description of this video. 7 days free. You guys can check that out completely for free. But guys, let's take a quick look at the chart from IPO day on SK Hynix. Debuted at 149, I believe, popped all the way up to 168, up 13%, and it was relatively stable for the day, which was pretty crazy. It popped immediately and pretty much kept tightly on that line for the entire day. But one thing I want to point out that a lot of people are not talking about when it comes to long-term demand for SK Hynix and Micron's HBM chips is the life cycle of how long these chips actually last. And this is expected to only be 2 to 3 years, and let's talk about it. Now, the physical lifespan of HBM chips for manufacturers like Micron and SK Hynix is typically 5 to 10 years, typically, but not with the use cases for these AI data centers. Check this out. However, in heavy AI and data center workloads, their usable commercial life is much shorter, about 2 to 3 years. Now think about this, guys, and we'll talk about exactly why this is the case, but I just want to point out that, companies like Micron have massive long-term contracts already tied in with customers for the next 5 years, locking in prices at all-time highs during this extreme shortage. And we expect SK Hynix to follow suit as well. We haven't seen massive announcements from SK like Micron, but most likely they're going to do that in the coming months as well, right? It just makes sense. Now, as they're doing that, locking up these contracts for the next 5 years, we're looking at chips that they're selling that only last 2 to 3 years, right? Or at least that's the expectation. So it's not like they're selling chips that are going to last about 10 years, so demand could drop off in a few years. We have chips that are being sold expected to only last 2 to 3 years, and then contracts lasting 5 years, right? Essentially, these long-term contracts, coupled with the fact that these chips are only expected to last a few years, could break the cyclical nature of these companies, right? That boom and bust. We've talked about this at length. A lot of people, criticize Micron for having a boom and bust nature, right? The stock pops, then it crashes, and it pops, and it crashes, and it does that over and over as demand increases and then decreases for the product. But again, the fact that these chips are only expected to last 2 to 3 years could completely change that, and personally I think because of these factors is going to lead to long-term price appreciation of the stock for both Micron and SK Hynix. But let's talk about exactly why these chips don't last very long when it comes to AI data centers. Now, first of all, the physical lifespan, like standard DRAM, the base silicone has a mean time between failures expected to last about 7 to 10 years in optimal conditions. Keep note of that phrase optimal conditions, because they're not optimal, and we're going to talk about that in a second here. Now, commercial usability, HBM innovation cycles move incredibly fast. Now, this is because AI models double in size rapidly. Now, because the AI models that are using the memory chips become very complex very quickly, these memory chips, although physically they could still last potentially up to 10 years, to keep up with the innovation in the AI models, they end up having to upgrade these memory chips more quickly. Now, HBM generations shift every 2 to 2.5 years because of the innovation in AI models doubling so rapidly. Servers often upgrade to newer hardware before the memory even physically degrades. On top of that, there are thermal limitations. Now, these stacks run incredibly hot, and this has an impact on the lifespan of these memory chips as well. HBM stacks multiple DRAM dies on top of each other using microscopic silicon channels. Operating these chips consistently above 90 degrees Celsius can reduce their expected operational lifespan by 25 to 35% due to mechanical stress on solder joints and package interfaces. So even if you think, hey, these AI models aren't going to double as fast as they have been, we do have this heat putting physical stress on the memory chips as well. Then we have skeptics saying, Andrew, look, you know a thing or two about investing, but you don't understand that these hyperscalers, which for the most part are the ones building out these AI data centers, are going to slow down CapEx spending, right? Well, check this out. Google issued shares to raise $85 billion, and they're going to use that to continue building out their CapEx. And the thing that I want to point out is that these hyperscalers like Google raise $85 billion. You know what that accounts for, folks? That is only 2% of the overall shares of Google. Google, worth $4.3 trillion. Because of that massive market cap of Google, it only took them 2%, maybe 2.5% of the shares printed to raise $85 billion. Now think about that, guys. The main customers for these chips are the massive hyperscalers like Google, Amazon, Meta. You know who they are, right? And in order to keep funding these data center build-outs, they need money. Now people are speculating, hey, eventually they're going to run out of money, they're going to have a hard time building CapEx, and then demand's going to plummet for these chips. But if a company like Google can raise $85 billion by only printing 2% of shares, that's going to give them massive access to liquidity to continue building out these data centers, guys. And let me know your thoughts on that in the comments. Google's parent company, Alphabet, upsized its equity offering in June to $85 billion to fund its aggressive AI data center and computing infrastructure expansion. $10 billion from Berkshire Hathaway. It looks like Berkshire with Warren Buffett out of the way, they're going a little more into tech as they have been over the last decade or so. $35 billion in underwritten offerings and $40 billion at the market program, a direct market sales program targeting late Q3. Proceeds will help cover the massive $180 billion to $190 billion in CapEx projects for 2026, and will also fund a sell-to-cover system for employee tax obligations. So guys, funding the build out of these AI data centers is just not stopping, in my opinion. You see the amount of money that these hyperscalers can raise by just printing 2% of shares is completely insane, and that bodes very well for companies like SK Hynix and Micron, as the CEO of Hynix says that the shortage on memory chips is going to get even worse in 2027, and most experts agree that it's going to be even worse than it is now. Now check out this quote from the CEO. This was on IPO day. SK Hynix CEO said, "We forecast that next year will be the worst year in the industry's history from a supply perspective. Our customer demand continues to go up while our capacity has limits. We still forecast that customer demand will remain higher than supply capacity even beyond 2030. But we are doing our best to solve the problem." So not only do they expect next year to be the worst year for the shortage, which bodes well for pricing power for companies like SK Hynix and Micron, which would most likely lead to better margins, better earnings, and better price appreciation of the stock. They expect the shortage to last through 2030. And guys, when you think about it, a couple of reasons why. One, there's only a few companies that actually make these chips, right? So not only do you have to have the specialized IP, you have to have, the build outs, which take years. You also only have a few companies that even do this, and they're not necessarily incentivized to flood the market with supply. Now, I'm not saying, that they're purposely suppressing the supply. What I'm saying is they're fully aware that they hold the keys to the amount of supply that hits the market. And yes, it takes, inherently it takes years to ramp up supply, but they understand what they're doing. They've been exposed to cyclical demand supply drops, and they don't want that to happen again, right? Now, the suppliers are only slowly adding capacity, wary of prior boom and bust cycles. They do not want to go through a bust. So when you have a handful of suppliers, think about this like oil, right? We already know it is a known thing that oil suppliers purposely limit supply to increase the price. Now, I'm not saying they're going to collude in this case, which obviously would be illegal, but they know what they're doing, folks, right? And another thing that's interesting is memory, which is what SK and Micron make, now dominates the AI chip component cost. Take a look at this chart here. Green is memory, yellow is logic, which are the chips that NVIDIA makes. And the other things are miscellaneous, packaging, accessory items. Memory is huge. It is almost 2/3 of the cost of AI component development. It looks like in 2024, it was about 50%. It has continually ticked up to about, looks like it's at about 66%, about 2/3 of the cost. So the bottleneck is coming from memory. I think a lot of people would be shocked by the fact that the component that NVIDIA makes is actually a much smaller part of the overall cost. And you see companies like SK and Micron, you know, they're sitting on a gold mine here, folks. This is the biggest cost when it comes to building AI chips, and I don't see demand stopping anytime soon. And these memory giants are racing to expand AI chip capacity. I want to scroll down here. I want to show you guys exactly how SK and Micron are investing to increase supply, and how specifically Micron is being boosted by the US government with subsidies in order to do so. So Micron is ramping up investments as Washington pushes to bring more semiconductor manufacturing onshore. This is a national security issue, right? We don't want to end up in a situation when we're in a global conflict and our chips are being seized because they're made in other countries. We want these chips made in the US, even if it might be more expensive. The US is going to subsidize the production of these chips, and that does bode well for Micron. The company plans to invest more than $250 billion in the US through 2035, including a new memory fab in New York and Idaho, and an expansion of its Virginia plant. It aims to increase the share of its DRAM produced in the US to 40% from the current single digits. Micron budgeted $11 billion for CapEx this year, up 120% from last year, and is expected to receive up to $20 billion in US subsidies and tax incentives. $20 billion in subsidies and tax incentives from the US, allowing them to build out this CapEx to increase supply. Now, separately, it's going to invest a lot of money in Japan to expand production there as well. Now, when it comes to SK Hynix, they plan to use the $26 billion that they raised from the NASDAQ IPO listing. They created shares, listed on the NASDAQ, and raised $26.5 billion. They're going to use those funds to expand wafer production and advanced packaging capacity. The proceeds will fund its first fab in the Yangin cluster and a PNT7 advanced packaging plant as well. Essentially, these companies, SK and Micron, do not foresee demand stopping again because they have these long-term contracts locked in with prices elevated, and they know that these chips don't last very long. So folks, with that said, personally, I do expect Micron stock and SK in the mid to long term to continue to go up. We do have a dip. Micron stock is well off its all-time highs. It peaked at about 1,200 a few weeks ago, since has dropped to 979 currently. I do expect the price to go up, and it will be interesting to see what happens with SK, as Monday will be the first full trading day on the NASDAQ. Let me know your thoughts in the comments, guys, and as always, please like, please subscribe, and if you want to see the method that I am using to manage my $1 million portfolio, click the link, 7-day free trial. You can talk to me in the chat. You can see which stocks I'm buying, and you're gonna learn the method that I use not only to grow my $1 million portfolio, but to analyze stocks like Micron and SK as well. So guys, thank you so much for watching, and I'll see you on the next video.